Hello and a very warm welcome. You're watching Market Fatafat. I'm Ankita Saxena. With me is Sheshat Varyu. In the next half an hour, we'll take you through all the top buzzers in the trading session, either on the back of news flow or on the back of technical analysis. But with that, let's get going with the show and start with taking stock of how the market is shaping up at this juncture. Well, we have cooled off a bit from the day's highest point. In fact, we're down almost 200 odd points from the day's high. As you can see on the chart, we're heading towards the lowest point of the day. But nonetheless, we are managing to hold on to this 24,000 levels on the Nifty even now. Nifty Bank is also following suit, though it has turned red. It is trading at the lowest point of the day. That's trading with cuts of 100 odd points on the Nifty Bank. Small caps have and mid caps have also given up their morning gains. In fact, they have become quite flat. Small caps right now very marginally in the green, with gains of 0.05% on the mid cap, and small caps also very marginally in the green. In fact, it's turned absolutely flat right now at the lowest point of the day. So the market has given up all the morning gains that we saw coming in. It was a steady day that was coming in, but come second half, we are reversing all those gains. And sectorally also, let's take a look at its Nifty Realty that's doing well, still doing well with gains of 2 odd percent. Anantraj, Godrej Corp, DLF, all of them trading with gains of 2.5+%. And Nifty Media and IT are on the back foot. Now remember, Nifty Auto had come out with its numbers and it was doing decent in the morning, but that has also cooled off since morning and slipped into the red with cuts of 0.3%. So that's how largely the market is shaping up, Ashesha. We are giving up those morning gains as of now.
Well, yes, we've given up all those morning gains, but let's get started. This is a show where we discuss all the stocks that are buzzing in trade today. And on the technical side, we are now joined by Akshay Bhagwat, Senior Vice President, Derivatives Research at JM Financial Services. Akshay, afternoon. Thank you so much for joining us here today. We'll come to you in just a bit. But before that, let's talk about the stock of the day, Zentech. The stock is declining in trade today on the back of very weak set of numbers that the company reported for the fourth quarter. The stock is now down more than 11%. Revenues have declined by 45% on a year-on-year basis, and EBITDA margins have come in at just about 29% versus 42% that the company reported same time last year. The management did acknowledge the weakness. They said that FY26 financial performance was muted related to FY25. FY26 was a year where order conversion timeline was delayed beyond what the management expected, but now they are very bullish on the outlook for FY27, where they believe that execution is likely happening in FY27. In fact, the company said that the company will record the highest turnover in the company's history in FY27. New execution target of 4,000 crore across 2 years is what they have guided for versus 6,000 crore earlier, and export contribution is expected to come in at about 30% of their revenue. So yes, clearly fourth quarter was weak, but management outlook for the next year is positive. But despite that, the stock is down 11% in trade today.
All right, let's move on then to the next counter that Akshay has picked out for us on the charts. Glenmark Pharma is the name that you are looking at. Akshay, in the last few weeks, Glenmark has been, in fact, Glenmark has done well and held out pretty well in this weak market. A 13% gain in the last 1 month and a 30% move in the last 6 months. Do you see this positive up move to continue for Glenmark?
Good afternoon to all. Yes, if you look at the momentum in the pharma sector today, the FMCG and pharma both are noting good positive flows right from the beginning of the day. And Glenmark Pharma on the technical chart is one of the stronger names. Though on an intraday front, it is slightly on the negative side, but on the technical chart, we noted a clean technical price volume breakout, a few trading sessions back at 2300. And with that breakout, targets of 2500 to 2530 are what the technical setups have to suggest. So it's a buy. The positive view continues till we trade about 2300 for short-term scenario, and you can work with potential targets of 2500 plus.
All right, so those are the price levels for Glenmark Pharma, but let's move on to the next counter that is in focus, and that's Equitas Small Finance Bank. That's doing very well. In fact, the stock was up 8% in the morning on account of strong quarter four numbers. It's still managing to hold on to those gains, up 7.5%. Let's take a look at the numbers. Then we see the gross advances that grew by 22% on a year-on-year basis and 7% on a sequential basis. The non-MFI book also grew 21% on a year-on-year basis, and that was led by the growth in, led by 21% growth in HF and 24% in MSC and 180% growth in the gold loan over the previous year. We also have the highest quarterly disbursement numbers, which grew 72% on a year-on-year basis at 7,347 crores and 12% on a sequential basis. These are the highlights of the numbers. We also the NIMs for the quarter that stood at 7.29%. That significantly improved by 57 basis points. So good set coming in for Equitas Small Finance Bank. The street has given it a thumbs up. That's trading with gains of 7.5%.
Okay, so that's the view coming in on Equitas Small Finance Bank. But let's also put the spotlight on Vodafone Idea. The stock is in focus today because the government revised AGR dues to about 64,000 crore rupees. This is a 20% lower estimate as compared to 80,500 crore, which was estimated by the company. The reduction has meaningfully lowered the overall liability burden for the company. No additional interest will have to be paid by the company. An existing 10-year repayment moratorium remains unchanged. The company is also targeting about 25,000 crore in bank debt funding, and discussions are led by State Bank of India and consortium lenders. AGR relief has significantly lowered lender confidence, or rather improved lender sentiment, and that is the reason the stock is up 2.5%. It is off the highest point of the day, but despite that, sitting with gains of more than 2% as we speak.
All right, moving on then, Akshay, I'll come to you. You've picked out Reliance for us on the charts. Tell us on the charts, what are the levels that you're tracking?
Yeah, so Reliance Industries is one stock which has come out pretty strong in the last 4 trading sessions. We have almost a one-way rally from 1320 to 1458 where it trades. So it's a stock where overall the setup is signaling that there is a strong support in the making at 1320 from a positional perspective. And probably in the coming days, you can look forward for targets of 1560 plus. So a positive outlook, but from a 1 month kind of a hold and a buy and hold scenario, looking at targets of 1560, and the positive view continues till we trade above 1360.
All right, let's move on to the next counter that is in focus, and that's RailTel, that is doing well in trade after it reported a strong quarter 4. Let's take a look at the numbers that RailTel has reported. We do see revenue that rose 27.5% on a year-on-year basis at 1,669 crores, and the EBITDA increased to 233 crores with a margin that slightly improved to almost 14%. Profit grew almost 25% on a year-on-year basis, reflecting healthy earnings growth supported by stable operating performance as well. On the back of good set coming in for RailTel, the stock is up in a way 2.5%.
Okay, so that's RailTel for you. But on that note, we need to slip into a very short break. We'll discuss many more buzzers on the other side. Don't go anywhere. Welcome back. You're still tuned into Market Fatafat, a show where we discuss all the stocks that are buzzing in trade today. And let's now put the spotlight on another earnings candidate, and that is NetWeb, where revenues have come in at 773 crores, which is a decline of about 4% on a year-on-year basis. And EBITDA margins have come in at about 12.5%. But the company has reported margins which have been lower than their own guidance of 13 to 14%, and that is perhaps the reason the stock is declining. In fact, financial borrowings have risen to 270 crores versus absolutely flat borrowing same time last year. And as a result of this, finance cost has also risen to over 8 crores versus just about 1.2 crores that the company reported same time last year. So on the back of weak set of results that the company reported, the street clearly is not happy, and that is the reason the stock is down more than 5% in trade today. In fact, earlier in the day, we also spoke to the management of the company. Let's listen into what they had to say.
We are not a kind of a box pusher kind of a company. We are a proactive sellers, wherein basically we spec a deal and we completely get into a deal. So in that process, we have very good visibility of what deals are going to come. So accordingly, we have to plan inventories, and the business is also growing. If you see, the base has really grown very is growing very high. So this is, I think, almost for 3 years after listing. Every quarter we have grown, and we have continually maintained our completely growth momentum. And I'm very confident that coming year also we'll keep on growing in better or similar way.
All right, that's the management of NetWeb. But let's move on to the next counter that Akshay has picked out for us. ITC on the charts. Akshay, tell us what are the levels that you are penciling in, because this counter hasn't really done much in some time. So do you expect it to move now?
Yeah, so if you look at the market, FMCG is somewhere slowly picking up pace in terms of the price and the volumes and the open interest in derivatives since last week. And ITC on the technical charts are giving us signals that there is a support in the making at the levels of around 300. This is a short-term support. The stock is making a reversal attempt. In all likelihood, if it succeeds, we are looking for potential targets till 330 on the upside. So continue your buying bets with a stop loss below 297 for potential targets till 330 from a 1 month perspective.
Right, let's move on from ITC to the next the next one that is in focus, and that is Godrej Properties that is in focus on the back of its results. Let's talk about how Godrej Properties is doing. It is trading up right now. With gains of more than 2.5% on the back of that. If you look at the results, strong earnings coming in, where the EBITDA has missed the street estimate, but the guidance has been rather strong. Let's take a look at what the numbers look like. The profit has jumped up 70% on a year-on-year basis at 650 crores. The revenue is also seeing an uptick of 63% at 3,458 crores. The EBITDA has come in at 523, though that has missed what we were penciling in. The margins are stable at 15.51% versus a 5.2% on a year-on-year basis. They have also delivered the highest annual net profit, and they've achieved the highest ever bookings, collections, operating cash flow and business development in FY26. So on the back of that, Godrej Properties is now doing well with gains of almost 2.5%.
Okay, so that's Godrej Properties for you, but let's also put the spotlight on another counter which is gaining on the back of their fourth quarter results, and that is Aster DM, where revenues stood at about 1,200 crores, which is an increase of 18% on a year-on-year basis, and margins have also expanded by 50 basis points to come in at 19.7%. Management in their con call said that they are expecting revenue and EBITDA growth to sustain in FY27. Company is planning total bed additions of about 2,500 over the coming years, mix of brownfield and greenfield expansion. They expect YOY margin growth and brownfield projects that are likely to be accretive going forward. Merger synergies, meanwhile, from QCIL are expected to kick in from day one itself. In fact, the merger has already realized 85 crore in synergetic gains and integrated acquired inquiries, which is already aiding the company over the last few quarters. So very strong management commentary. Results have been good, and most importantly, the management says that the trend will continue in FY27 as well. So on the back of that, the stock is up 6.5% in trade today.
All right, moving on then. Akshay, coming to you. You picked out Biocon for us. On the charts, tell us what are the levels to watch out for. Another counter that has not really moved much, but on the charts, do you see a re-rating coming in for Biocon?
Yeah, so technically, there is evidence that support of 340 is cemented, and the stock is making an attempt of a short-term reversal. In all likelihood, if this reversal succeeds, we are looking for a potential upside target till around 390 on the short-term charts. So 390 is the target you work with. The support is around 345, below which you can maintain a trading stop loss.
All right, moving on from Biocon to Epigrel, another counter that is doing well in the trading session. After posting a good set of Q4 earnings, revenue grew 17% to 736 crores, and the EBITDA also rose sharply to 169 crores, driving the margin expansion to 23%. However, there was some pressure on the bottom line, but Epigrel right now is doing very well in the trading session with gains of almost 11%.
Okay, so that's Epigrel for you. Meanwhile, let's also talk about Idea Force. The stock is in focus today because revenues have risen from just about 20 crores same time last year to a whopping 141 crores in the fourth quarter. And on the bottom line, company reported a loss of about 26 crore last time, but it has jumped to profitability. It has reported a profit about 60 crore in the fourth quarter. It reported positive EBITDA after 6 quarters, and current order book position now stands at 310 crores. It's the highest ever annual order bookings of 530 crores that the company reported in FY26. It completed targeted execution of 40% of open orders in fourth quarter FY26 with improved gross margin and positive EBITDA for FY26. But the most important takeaway is that it has reported profitability on the bottom line. This has come in after 6 quarters, and that is the reason the stock is locked in upper circuit of 20% as we speak.
All right, moving on. Next to Akshay, you've picked out Torrent Pharma for us. Tell us what are the levels you're tracking for Torrent?
Yeah, for Torrent Pharmaceuticals, again, this is a short-term neutral setup where your upper end of the range is 4,500 and somewhere a support of 4,000 is seen on the charts. Right now, we are stuck at the midway of this range, and the probabilities are high that the initial attempt should be to touch the upper end of the range, which is around 4,500. That's the target one can work with, and the support of 4,000 is where you maintain a stop loss.
All right, so that's Torrent Pharma on the charts, but let's talk about Bombay Dyeing. That's also in focus. In fact, that stock was trading up 9% in the morning on account of launches of 3 ICC in Dadar, which has a revenue potential worth 6,500 crore rupees. On the back of that, Bombay Dyeing is now up and away more than 11%, almost 12% gains coming in on Bombay Dyeing.
Okay, so that's Bombay Dyeing for you. The stock is gaining in trade today. But Akshay, thank you so much for taking your time out and joining us here this afternoon and discussing all those stocks in focus today. But shifting focus to another counter then, Mazgaon Dock Shipbuilders.